Welcome to SarderTV. I'm Jennifer Crumpton, and today I'm talking with Bailey McCann. She's the senior news editor for Opalesque and the author of Tactical Portfolios, Strategies and Tactics for Investing in Hedge Funds and Liquid Alternatives. Bailey, tell us a little bit about your diverse career journey that you've had.
Sure. So I started out of undergrad working for a startup in the DC area, focusing on information services for Capitol Hill committees and those people and contractors. And from that work, sort of CivSource came out of that. I developed a specific interest in state and local policy issues. And so shortly after finished at the startup, I started CivSource with a friend who was also focused on policy. We were two political science kids. And then the hedge fund piece came in a few years later. I had the opportunity to start writing for Opalesque and really developed an interest in hedge funds and alternative investments.
So you had not previously studied investments per se. You sort of learned it.
Yeah, I kind of learned it in the field, yeah.
Wow.
Just from preparation for talking to people and for stories, and then also just trying to understand the sort of waves of data that come out of the industry and trying to interpret if they actually are worthwhile to include anywhere.
What do you think has made you so successful along the way?
The main thing is just trying to keep at it no matter what kind of adversity you face, or if you start to lose confidence in yourself, which sounds really cliche, but you know, I'm kind of an introverted person anyway, so to just pick up a different topic and go with it and try to go in and be serious and be taken seriously is a little bit daunting, but if you just like keep at it and you have confidence in your ability, then eventually it'll pay off.
What about mentors? What role have mentors played in your career?
I think the mentor conversation is so interesting because I think it's harder to come by sort of traditional mentors if you're not like in a corporate setting.
Yeah.
I dedicated my book to my mom because she has a tendency to tell me things with no filter whatsoever, which is really helpful. Not always comfortable, but
Sometimes,
really helpful.
yeah.
Yeah, exactly. And then the other part of it is just I've had the benefit of people who are interested in working with me to teach me how to run a business, to teach me what a hedge fund is, to help me get ahead in my writing ability. And those kind of relationships have been great, and they've been also, you know, deep friendships alongside that, which I think is important, even if you have, you know, a mentorship program where you work, for example, which is more common in a traditional corporate setting. I think it's worthwhile, especially for women, to ask for skills instead of just asking for advice, because very often I think women get coached on confidence and sort of like these softer things, and so men get ahead even if it's inadvertent, just because, you know, your mentor is patting you on the shoulder from making it through a meeting, like you're about to be overcome with the vapors at any, like at any time.
Right, that happens all the time.
And every conversation that you hear about mentoring around women is always about confidence and like, you know, putting your foot out there, and those are important skills, but they're not, you can't run a business on confidence. And so I think it's worthwhile to ask for that in those relationships as well, and maybe, you know, kind of turn the traditional mentorship relationship on its head a bit.
What other types of advice would you give young people who want to rise to the top today?
You know, I think for young people, it's really hard than most people want to admit right now in terms of, you know, what you're coming out of school with and what you can look for. So I think the main thing is just to do something that matters to you and have clear goals around that and what you want that to be. I mean, I still have relatives waiting for me to get a real job, and what they, you know, like what they mean by that is like a job with a pension where you like do the same thing every day, and that's awesome. Those set of goals are great, but they're not really this goal set that exists anymore, especially for younger people going forward. And so when you have so many jobs that didn't exist 5 years ago, I think it's just important to find something that matters to you, that you get fulfillment out of, because so much of the other stuff, trying to figure out the money and all of that, is going to be a grind. So at least have one aspect about it that matters to you.
Yeah. And we spend so much time at our jobs now, which is really different too. It's no longer 9 to 5.
Right. Yeah, exactly. So, I mean, I think that's also why it's really important. And I would say the other thing is if you have, in any capacity, the ability to just help somebody else get from A to B in whatever capacity that is without judgment, and you just do it, then just do it. It's probably the most radical thing anybody can do anymore, is just to acknowledge that they live in a society and take part in that instead of just focusing on their next thing.
What's been the biggest challenge in your career, and how did you overcome it?
I think the biggest challenge is always just, trying to be taken seriously. I don't have a gregarious personality, and so typically when I come into a room, it's not like I can take over a space. So I've always had to kind of stake out my own niche in any situation. But I think the biggest way to get around that is just to come in prepared, come in with a viewpoint that you're reasonably assured of. You don't need to come in with some kind of like crazy gospel about something, but just like keep an open mind, but at least come in with a frame of reference about the task at hand and what you're hoping to do, or some curiosity about what's before you. And it'll probably work out. And you'll probably end up weirdly ahead of a lot of people in the room, because there is people coast so much.
Right.
That if you're willing to put in a little time before, you can probably get a lot more out of your interactions.
You've worked across multiple sectors, which is so interesting. What makes a really great leader across those lines?
I think there's like a couple of really standout qualities that you don't see a lot. And the biggest one is just honesty. There's a tendency, you see a lot of people hiding behind policies, procedures, weird kind of this corporate doublespeak that we all take on in work situations.
Yeah.
And I mean, that's fine, but just have the honesty to have an idea, have a plan, set up to say this is what we're going to do. And then even if it goes awry, just be honest with people and take that responsibility. And then treat people like humans throughout the process, who are also adults in the room. Because I think that's really important, as opposed to just like hiding behind some matrix or some sort of management system. I think people can see through that really easily, and it just makes them check out. And I would say the other part is just flexibility and communication. I mean, once you establish the plan, realize that business conditions change constantly, and the situations of your individual staff might also change in ways that aren't necessarily bad. But it's one thing to be a stickler about a deadline. It's one thing to do that and not take in anything else into the situation.
Right.
And so, I think that can bring a lot of people down and make them very hesitant to stay fully engaged if they aren't sure that they can ask questions. And that's where like the communication piece comes in. Just communicate it all the way down. Don't be that guy who only comes out to like bring the hammer down, or who only comes out to say, we're changing the world, guys, at like the annual meeting, and then all they ever see after that is like your assistant. Just be a human. Just let people know that you're trying to do your job as much as they are. And I think it's much more relaxed but focused work environment.
You mentioned CivSource earlier. Why did you create CivSource? How is it unique?
So as I mentioned, CivSource was sort of the brainchild of me and a friend who were interested in policy issues. And we just started writing about stuff we were interested in. And a lot of it's state and local focused, and there's a pretty heavy bent on technology within that. They're not the stories that are going to be front page of the New York Times, but I think they are the stories that are important to people who are in that CTO spot or who are city council members, because there's not really a place for all of them to come together on a regular basis and just hash it out like you would with your coworkers over a beer. So we're just trying to kind of provide information and maybe some case studies that fill that information gap. I would say it's not a straight trade in the sense that we prefer access over investigation. I think there's a blend of both. We're willing to call shenanigans.
I noticed. I like that.
Yeah. But, I think it's important to kind of have a blend of both. I mean, you don't need to come at people all the time. There's a way to do both. The guy I was working on it with, he decided to actually go to grad school after getting a lot out of the work and really focus on that as a career. And I decided to stay with it because I was interested in the analysis piece, and it gets me writing every day, and it's kind of important to me. So,
and that's CivSource,
yeah,
right?
CivSourceOnline.com. And you know, it's free. It's a little wonky if you're not in the public sector,
but you can get into it really easily. I'm not in the
Yeah.
public sector, and it was extremely interesting to me because it really does pick up on a lot of headlines in a way. It relates to a lot of what's going on in the larger
Yeah, I mean, I
world.
think we try to cover more sort of the back office of what's happening, and I do think that that's interesting to people.
Yeah.
You know, even if it's not like in their top 5 things that they saw that day.
What are 2 or 3 of the top IT blogs that you track?
For relating to what I do with CivSource, I read like Information Week. I think what they're doing at government technology is really interesting. There's a cybersecurity blog, Dark Reading, that I like.
Really?
And then for more general interest stuff, TechCrunch and Recode give you a really multifaceted view of what's happening in tech. That's it's a little more consumer oriented than what I might do at CivSource, but it's really interesting. I think Fred Wilson, who's a venture capitalist, he has a blog. It's really hard not to find a great post that he comes out with every day because it's very focused on that side of the industry. I mean, that's more than 3, but
Yeah, that's great. What do you think is the future of civic tech? What are the challenges facing civic tech?
It's a really new subset of the startup universe. So in that sense, the future is wide open. The reality is you've seen the first wave kind of come to market of apps that are talking about transit times, or they're talking about, here's how to report if you see problems in your neighborhood that are non-emergency problems like potholes and whatnot. And those have been out for a while, and obviously they provide pretty immediate value for people in their neighborhoods. I think sort of the next frontier will be tackling sort of the harder problems of government. Benefits management, helping people kind of work the maze if they're on Medicare or Medicaid, or if they have earned benefits like food stamps, and kind of figuring out that with some help, because that's obviously really complex if you're in that system. There are bigger issues also like child poverty, blight, things that all levels of government are currently tasked with. And they can't easily be solved by an iPhone app. So it's going to be requiring some more heavy lifting that, might not be sort of the tech that we think of when we think of tech. It's probably not going to be like you can dial up your city council member like you can call an Uber, but maybe if there's like...
That would be nice.
Right? But, if there's a better delivery system for those services enabled by technology, I think that would be worthwhile. And I think there's an opportunity to do it with a greater level of accountability than we see from a lot of the big vendors out there that have sort of been in government up to this point, that have a particular view about how that should go, often an expensive one.
Yeah.
But, I think for that to move forward, what we're really talking about is procurement reform, which is sort of like the third rail of politics. I think procurement reform, if you're going to be real serious about it, is probably harder to do than Social Security that everybody's talking about. There's not a big incentive for anybody in government right now to really take it on in a real way, but I think it's going to be what makes civic tech as a space sort of viable long term, which hasn't really been proven yet. So, I think that's important, and I think that it also requires a little bit of a culture shift within the tech community. There's a very hyper libertarian instinct inside tech to, add the word disruptor to something, and then no matter what, basic services have like these godlike powers now because they're disruptive, and seems to suggest that there should be no regulation on what they're trying to do, or there should be, or they're outside the current system, which is fine if you want to go buy your own island. But, you know, we have a thing here, we have a society.
The rest of us have other stuff going on.
And so, you know, there's got to be a willingness to have a real serious policy discussion beyond these lawmakers are so behind the times. And, you know, let's just get some feds who are now lobbyists to go figure it out and raise a stink. I mean, that has utility, but how far does it get you over the long term when you can be engaged in those policy discussions in a real way? You know, it's always surprising to me, sort of that math where it's like, we'll lobby it instead of do it. And how much time are you really saving at that point?
Right.
When we could just be getting to the next thing.
Yeah.
You know, we could just move forward, but maybe not in the exact way that you planned. So I think there needs to be a willingness on both sides to sort of acknowledge that in a serious way.
What's your mission as the senior news editor of Opalesque? What are you hoping to do?
Opalesque has been around for about a little over a decade now. And so it kind of came to market when there wasn't a lot of alternative investments focus or news outlets focused specifically on alternative investments. So in that sense, we've kind of carved out a niche that it's not going to be a bunch of guys going on there with their like hot stock picks. That's not always the most relevant conversation for alternative investments, despite it being the most common format for business journalism. So it's a bit wonkier. It's a little bit more where you're talking to managers and you're talking to investors and lawyers and regulators and trying to get at, you know, what are driving these strategies, what is the industry talking about, and kind of presenting that back out in a way that's digestible and put it in a context. And so I think, you know, my role in that is to try and just take what I'm seeing in terms of data and conversations with people and what's happening in the market and kind of formulating that into more digestible and plain English reference material for people to kind of say at the beginning of the day, okay, this is what happened. This is where we're probably headed. And they can, you know, do with that what they will.
Do you see more women starting to invest or even get involved professionally in investing?
I do. I mean, I think there's been, I would say in the last 3 to 5 years, there's been more of a push, at least a recognition that there's no line for the ladies' room in finance. And so it's going to take a big push, and it's going to take a big push from the investor community, probably before you're going to see, you know, individual fund managers kind of making those decisions. Because what you have seen historically when it's funds and banks making those decisions is that women get consigned to these kind of pink ghettos of investor relations, or she can do math but only on the municipal bond desk, or she's doing marketing and that's it. And there are a few cases of sort of people who've been able to break out of that, but it's not the norm. But you have seen a bigger push from like the pension side, from the investment community, when they're taking those pitch meetings and there's no women in the room, or there's only one. You know, CalSTRS in California, which is one of the larger pensions in the US, has really started asking, why isn't there anybody in the pitch meeting? And or if they only see one, you know, why? Okay, you have the token one, right? You have this lovely piece of yard art over here. What is like, you know, where are the others? Surely there are some, and it's going to take a fight like that on boards too, to not accept the token hire. There's a group in the UK that's pushing for, you know, 30%. Which still seems kind of baffling when you're talking about 51% of the population. You know, I mean, I saw a chart that they did that of all of the men who have the names John, Robert, and William on boards is more than all of the women on all of the boards. That's, you know, I don't think any woman is excited to be included as part of a quota box. Right. But I do think something's got to give. And if it's not going to be the hiring decision without a quota box, maybe you look at it. You know, maybe there's some kind of way around it. And I think on the fundraising side, that's also a problem. I mean, you see a lot of statistics where women fund managers outperform male fund managers fairly consistently, which should perhaps be enough to start pulling some money off the sidelines. But I think the conversation that those women face is similar to the conversation that women face when they're going to raise venture capital money, which is there are guys on the other side of the table and they don't think that what you're saying in the pitch meeting is going to come to pass. And they don't think that for a range of reasons. You know, children crops up as like the most common one still in 2015. And if you pigeonhole women into this thing where the prime directive is eventually there's going to be a child, you know, women can have children and do other things. I've seen them do it. They can also choose not to have children. They can also make both of those decisions independently of the functions of their business, and both can come to pass without successfully. Yeah, you know, I mean, you might not have a new mom who answers the phone at 11 o'clock at night to take questions about a prospectus. You could also ask yourself why you're calling somebody at 11 o'clock at night to ask them about a prospectus, or to ask them investment questions. You know, there could be perspective included as part of the conversation. I feel like there are probably junior male analysts who are getting those 11 o'clock phone calls too that might like an hour off.
Yeah, right.
It is okay to go do something else for a little while.
Unplug.
Yeah. But I mean, until we're willing to start having those conversations and figure out how to work through those biases, then you're not going to move the needle.
Let's talk about your book, Tactical Portfolios. Why did you write the book, and why right now?
When you're listening to business news, if you have any interest in it, there's a big narrative out there about what hedge funds are doing and the net effect that they have on everything. And there's also a broader conversation about how we've just really financialized sort of every aspect of our society. The book is basically designed to kind of just take the hedge fund piece and say, okay, here's what it is. Here's what they actually do. Here are the actual strategies. These are the service providers. This is what happens when you go to Grand Cayman. It's not like some crazy, you know, there's just guys walking around with briefcases full of money or something. It's, you know, and like, these are all of the options because I think people should just be able to have informed consent. And I've tried to do it in a way that's in plain English, so you're not just getting pages of equations or like these exalted profiles of hedge fund managers that say that they're titans of the universe and like, you know, he called the greatest trade ever. Yes, he did it once, you know, right. It's, okay, but how and why? And I just think it's important for people to have that basic sort of frame of reference about what the rules of the road are, so that they can understand these terms that just get bandied about everywhere, especially if you're, you know, trying to watch and follow along.
Who should read the book?
I think anybody really can. I mean, I think there's resources in both for people, you know, just for people who are just trying to understand it. Maybe they've become aware of a certain exposure in their 401k. I mean, there are hedge fund foldings sometimes in there. Or there are hedge fund strategies now in mutual funds, hedge fund-like strategies now in mutual funds. So, you know, the general would-be investor will find a lot in there. But I think also the accredited investor, the person who might be signing a check, there's resources in there for them as well. Just again, for this idea of informed consent, you know, have a way to sort of reference check all of the BS that your investment consultants are coming to you with, because they're coming to you with squeaky clean pitch books and ideal conditions for testing this strategy. And some guys are really good. Some guys are less good. It can be hard to figure that out from just looking at a pitch book without sort of a broader understanding of what's out there.
How do you see technology continuing to change investing?
There's a lot that's happening right now. I think fintech in general is one of the bigger spaces and more exciting spaces. There's a lot of activity there. I think most immediately, probably one of the bigger trends is the move toward Robo advisors for mass affluent investors or I know some accredited investors who are looking at them as well, and that's kind of an interesting area. Because you first started to hear a lot of investment advisors pushing back on these sort of automated options, because they're saying, well, I have this expertise, I can bring in, insurance, we can kind of do like an entire plan for you and look at your estate, and all of those are valid arguments. More and more now, though, they've started to open their own Robo advisors, or at least offer it as an option. And I think that's more of a recognition to the fact that some people just want to test it out, or they might not be able to give you $10,000 right out of the gate, but they want to try and put something away. And you're not really getting rewarded if you're putting it in a savings account at 0% interest. And some of the interfaces for them are really interesting. I mean, there's one that will just round up the purchases off your debit card, which is a really painless way for people to save, and and it's a Robo portfolio.
Really? How do Robo advisors work? You
have a little portfolio that's put together on the computer, and it's not going to be anything very exotic. It's probably going to be a basket of index funds, with sort of your usual exposures of stocks, bonds, more of the bigger ones, the more tested ones. And you just put your money in. However, if you're using that iPhone app, for example, you'll put little bits in, and it'll kind of swing up and down with the market, but you can just open it up there on your phone and read about what's going on, and then they send you the little disclosures, and every year they send you kind of a rundown of what you made and how to file the taxes. And there's basic questions there on most of the ones I've seen, like here's the tax form that's going to come to you, and here's how to do it, and have you considered a 401k if you don't have one. And I think those are all like good questions, sort of low bar questions. It obviously doesn't have the personal relationship or the frame of reference that you get from an advisor, but if you're 20, you probably can't afford an advisor. It's a good way to start.
So Bailey, how do hedge fund strategies work? You talk about this extensively in your book, and it's very informative.
Yeah, so there's really handful of major strategies that most of those hedge funds that you come by are going to be involved in. And they work a variety of different ways depending on what kind of exposure you want. The ones that most commonly come up are like equity long short, because they trade the public equities markets, usually slightly similar to what your average mutual fund will do, but with the ability to place bets that sort of pay you in the downturn. So that's the core differentiator, like a very oversimplified version of what differentiates equity long short from mutual funds, is basically that they can place bets that certain stocks will go up and that certain stocks will go down. And so in particular market conditions, that can be beneficial, because then no matter what happens, you sort of flatten out the performance. You don't really have as bad of a loss. Whereas if you were in a sort of classical mutual fund, you're only placing bets that the stocks will continue to go up. So when they correct, your options are to hold on and hope it rebounds, or sell it. So it's a little bit more of a dynamic viewpoint. And there are other strategies, credit, which looks at different parts of the debt market. There's managed futures, which often looks at commodities, currencies, options, and puts them together in different programs. Again, in like an oversimplified explanation would be to just follow trends. So I think it kind of, depends on how you approach hedge funds. You always, I would say, want to approach them with some kind of outcome in mind. Investors who, before the crisis, for example, just sort of blindly allocated to hedge funds as an asset class, tended not to fare as well as those who came in with some clear ideas about what they want. I mean, hedge funds are expensive. It behooves you to come in with an idea of what you want, instead of just going, okay, give me the top 5 hedge funds or something like that. A lot of them, the top 5 are kind of the same. So you're not really going to that's not always going to be the best benefit to you if they're all going down at the same time.
Is value investing a good strategy?
Yeah, I mean, again, I think it depends on your objective. Value investing has a lot of merits as a strategy. It's a popular strategy among managers and among investors. Warren Buffett's a value investor. So, if you were to only look at Warren Buffett, value investing is a great strategy, right? It's worked out great for him. I think there are other guys who are value investors who are not quite, Warren Buffett status yet. So it depends a little bit on the individual manager's skill and analytic ability. But from the investor side, it also depends on what your tolerance is. I mean, you might not, to go back to Warren Buffett example, sometimes he buys and holds things for years and years and years, kind of regardless of, what the individual price moves are at a given time.
And he can do that.
And he can do that. And other people are less comfortable about that, because if they get 3 years worth of statements where it hasn't been that great, you might see him booking for the exits.
Right.
So, I think from the investor side, it depends on what you're comfortable with. And that's going to be what's going to make the good strategies for you, and also what your relationships are with the funds.
What do we need to know about investment structures?
So there are a lot of investment structures, and I think it's important out of the gate to note that not every hedge fund in the world is like hiding out in some offshore haven with a bunch of lawyers like cooking it up as the most advantageous way possible. There are a variety of strategies that can fit into mutual funds, for example. And so, they're probably going to be available the same way as your Vanguard fund is available. And they're probably going to be housed in Scottsdale, Arizona. And it's just going to be kind of a different thing. There's European structures like UCITS, which is kind of their version of a mutual fund that's very popular. And it's taking off now, even outside of Europe, and Asia is using it. But it behaves similarly to a mutual fund. It's, it might be a little bit more expensive, it might be less risky, but it's good for conservative investors or investors that want a very regulated fund vehicle. And then there are your more classical hedge funds, which now are pretty heavily regulated, I think, across the board. I think it'd be hard to find a jurisdiction where they aren't. And those funds just behave slightly differently. They don't have the position requirements that you see in the mutual fund structure. So you might see more style drift out of your manager over time if his edge starts to erode or market conditions change. But it doesn't mean that it's inherently good or bad. I think it's just important to focus on less about the structure, but just focus on the outcomes and abilities of the funds that you're working with and what makes you comfortable. I think the most important part about the structure is just the disclosures. If you don't understand the disclosures, or if you're getting complacent in your diligence process because they've been a top performer, that's how a lot of people get burned, because they don't really understand what they are holding, and they don't understand, what the rules are.
Right.
So it's more, on the diligence side, worthwhile to just be clear about what everything's going to cost, and be clear about what's in the portfolio, in addition to just looking at that performance number.
How can we best do our due diligence on service providers?
The interesting thing about service providers is there's a renewed focus on sort of the operational aspects of funds. As the hedge fund space gets more institutionalized, you're seeing pensions specifically start looking at service providers more closely. It's kind of weird to think of auditing an auditor who is a service provider. And, or what lawyer are you going to get to check out another lawyer? But I think there are ways that you can do it in terms of looking at the reputations of those businesses and maybe speaking with other clients and finding out how they feel about it. I think operational due diligence is part of a broader diligence question in general that's important for people to focus on, and that's just don't get complacent just because it's a brand name fund. You know, there's like that old joke, you're never going to get fired for hiring IBM. And that's probably true for a certain extent. And especially if you have limited resources, you're going to have to, you know, do what you can. But it's easy. It's very easy to just go with the big names.
Right.
And then you're in the same big name as everybody else.
Right.
So there's an inherent risk in that. And you could maybe have the same relationship with a slightly smaller manager and maybe get more out of it just because you're not another $10 million ticket. You know, I mean, I think, you know, the thing about hedge funds, and this is part of what I try to talk about in the book, is that there's a basic set of blocks. There's like a basic set of things that every hedge fund is going to have. They're going to have an auditor, they're going to have a fund administrator, they're going to have their own lawyers, they're going to have a guy who does all the technology, and then they're going to have the traders, the brain. And every one of those guys is going to come into a pitch meeting and say, I've stacked these blocks entirely differently than any other person before me, whether that's true or not, you know. And then he's going to say, give me $10 million because I'm a genius, which, okay, you know, I mean, you may well believe him, and that's totally awesome. But you should have a basic frame of reference about what the blocks look like before he got there, and also who those people are. I think it would be a very unfortunate thing if you felt really good about a manager and then you come to find out that he's got like his brother-in-law's accounting firm is doing the audits because he's been with them since day one and they just haven't like totally scaled up yet. I mean, and that might be fine, but you probably just, for compliance purposes, maybe want to see a KPMG there or, you know, somebody else just to have a check. Just to make sure what's going on.
In the book, you mention regulatory regime changes and their impact. Can you tell us a little bit about that?
So since the financial crisis, we've basically just seen a real wave of financial regulation coming out of the US, coming out of Europe, less so from Asia, but still there. And I think it's been a struggle for everybody in the industry to kind of wrap their heads around it as quickly as possible. I mean, when you think about mutual funds have been regulated for a long time. They also had a number of years, though, to sort of phase it in. They didn't sort of just go, okay, we had this crisis, now,
boom,
you know, figure it out. So I think, you know, we're kind of now sort of in that more even path where some of the harder implementations have kind of started to happen and a few things have been working for a few years now and people are just kind of getting used to it. So despite all of the whining that was initially happening and the very real expense, it's kind of evening out a little bit now. But yeah, I mean, I think it hits really every aspect of the industry. I think the amount of information that banks and funds now have to keep on their investors for tax purposes, for the Foreign Corrupt Practices Act is kind of surprising. I think it's going to be surprising to new investors when they realize exactly how much information they need to provide. Just the amount of information that funds had to start tracking across all aspects of the organization. For reporting purposes was a big culture shift because you often had guys running, you know, I was doing this is my book, so here's this Excel spreadsheet about my day-to-day stuff. I have no idea what's going on the bond desk. I don't trade bonds, you know. And,
Right.
So there's more of a push to take a comprehensive view. But I do think that's a benefit to investors and to regulators in terms of just being able to get a better understanding of what's going on. I mean, you might not understand all of it, but to have the information there at least allows for you to be able to start to digest it.
Talk to us a little bit about the Jobs Act. Is it effective?
Well, you know, I mean, I think the Jobs Act, was interesting. It opened up a lot for like the crowdfunding space, which was beneficial for people. I mean, I think that's, there's a lot of benefit in crowdfunding. We've seen it with Kickstarter and with other platforms like Prosper, where it can be a really viable alternative to sort of a traditional bank loan. I think on the hedge fund side, the Jobs Act came in with all this pomps and circumstance and said, you guys can start doing commercials now, and it's going to be great, and it's okay if you have a website that says more than your name, and please log in so that when people are trying to look you up on the internet, it's marginally clear what you do now. I think that was well intended, but you haven't seen anybody really act on it.
I wonder why.
I think the other part of it is that the SEC and the CFTC pretty obviously were not on board with those provisions.
Okay.
And so the way it goes is you can do it, but then you open yourself up to further scrutiny because you're still only allowed to do it within certain parameters. And so I think people have to make that sort of individual business decision in terms of whether or not that's worth it.
Right.
And in some cases, I mean, I've talked to funds where they're also concerned about pushback from existing investors because it's, a question of, okay, if you're launching this new campaign, how much are you focused on my money? It's easier to do that if you're a multi-billion-dollar fund with a dedicated marketing team, but it's harder to do that if you're a newer manager who probably arguably needs the advertising.
Right. It's a problem, I imagine.
Yeah. So, I think it's just going to be a thing, one of those things where people kind of work through it from a business decision perspective. And I would say people are probably waiting to see those first 10 cases go out and see what happens before they want to dive in.
In the book, you ask, what color is your swan? Why do you ask this question?
Well, there's, what they were calling the Great Recession before that was a black swan event in the markets.
And what is that?
It's really just kind of when everything falls sort of at the same time, which was kind of unprecedented to see all of the correlations kind of fall together, and really hard for people to find sort of safe haven investments. In smaller corrections, you will typically see one or two pieces kind of come undone a little bit, and then you can revert back, maybe go into bonds, or maybe you can just go back to cash, or you can do whatever you can do. But in an event like that, it's very hard to get out of your positions because literally everybody's trying to get out of their positions, and there's nowhere to go. So, that title was just kind of a tongue-in-cheek way of talking about tail risk, which is a conversation that comes up a lot in hedge funds. Tail risk hedging is sort of a niche strategy within the hedge fund universe, and it's basically designed to kick in those kind of events and, mitigate your losses in a really epic kind of downturn. But during the periods where it's like now, where we're in a generally strong equities rally and there's, day-to-day correction light, that kind of strategy can be expensive because it's going to be out of the money most of the time, and it's going to probably be a little bit of a drag on your portfolio. But it's sort of like insurance, right? You don't really want to pay for all of the insurance that you pay for all the time until you have a hurricane and you need a new roof, and then it's like, oh,
God.
Yeah. But it's hard to hold on to that over, now over a 5-year rally. People are looking at that number and going,
why am I doing that?
Right? Yeah, exactly. And then other people who didn't have it are now looking at it, and you could make the argument that it's probably a little expensive to get insurance now because it's more likely that we're probably looking at some kind of corrective event.
So
You know,
fluctuations.
Yeah, so it's, I mean, it's always easy, it's always cheaper to kind of look at those the kinds of strategies when things are going great. Because then people are like, well, why do you want out of the money puts right now? Like, because it's a lot cheaper than when people are trying to sell stuff, you know?
Yeah.
So it's,
Interesting.
yeah, I mean, there's a bigger discussion about it in the book and kind of who's doing what, but there's a handful of funds out there that have different options, and that's really kind of what they focus on.
Bailey, thank you so much. Thanks so much for joining us today at SarderTV. I'm Jennifer Crumpton, and we'll see you next time.